Welcome back. In today's video, we're going to be exploring the top cryptocurrencies, and I'm going to be reviewing some of them, and we're also going to go through the data to understand where we are in the cycle, because if you guys have been watching my videos, you know, especially based on this, is the halving tracker, which is the number of days since the halving, and you can see the previous cycle before that, and the first cycle right here. We are now beyond the 550-day mark, or the 18 months since the Bitcoin halving, which historically we've never seen higher highs after that before we see lower lows. As you guys can see in the previous cycle, we topped out at about 550 days, went down in a downtrend for about a year. Same thing happened the cycle before that, and same thing happened the cycle before that. But we've been hearing a lot of things about the extended cycle, about there's going to be no bear market anymore. Well, in today's video, we're going to be exploring some of these top cryptos and some of the metrics and data that will let us know whether this thesis about no bear market is correct or whether it's wrong and we are rotating into a bear market. This is the Cryptoviser podcast. Make sure you guys hit the subscribe button, give the video a thumbs up. We upload every single day to bring you the latest happening in the financial world. Nothing I say is financial advice. These are just my opinions and my analysis. You can disagree. That is fine. Let me know why you disagree, though, in the comments below. Let's get right into it. And like I said, every single day we upload on this channel, sometimes we talk about the macro environment, which is what we're going to be talking about today. And sometimes we talk about individual cryptos, which we're also going to be talking about today, and do deep dives into some of them. Now, I want you guys not to really focus on the prices that you see on the screen, because clearly this is not a live video, but we have like some low IQ people that come onto the channel and they're like, but Cryptoviser, when did you record this? Because we're not at this price anymore. And it's like, yeah, because this is not a live video. And those are the people that we're trading against, right? Low IQ, not understanding how these cycles work. And it's not anything necessarily bad against that. It's just that's who we're trading against, right? And so we really need to understand where we are in the cycle, right? As I said, I believe that we are past the top of the market. I called the top of the market in the middle of 2025. And effectively, it was the top of the market. I mean, that's when the Bitcoin treasury companies and Ethereum treasury companies started popping up. This is when we were in peak euphoria. And I said after July, which was around here on the chart, everything after that would just be volatility. So if we did hit higher highs, that was the final time to get out, right? Because regardless if you think we have an extended cycle or not, even if you think we have an extended cycle, then you know that we are going to top out at some point. And so the further we go, the closer we are. And so in my view, July was the warning signal. And every time that we hit new highs after that, or got closer to new highs after that, it was kind of like, this is your last chance to get out. This is your last chance to get out. This is your last chance to get out. And a lot of people, I think, did exit a lot of their positions, and some people didn't. But if you look at like MicroStrategy, for example, MicroStrategy is already down over 20%. I think it was like actually 40%, from about $400 to about $250 when I'm recording this video. Meanwhile, Bitcoin's still at all-time record highs, right? And so we call that as well MicroStrategy shorting, or betting against the MicroStrategy stock based on the thesis that the middle of the year was the top of the market. But let's look at some other data to understand where we are also. Now, one of the things that I like to look at is DeFi Llama, because DeFi Llama gives us a really good insight into where the cycle is from a participation standpoint. Because as people start to exit the market, right, when they sell their crypto, you see exiting from staking mechanisms. You see exiting from these DeFi mechanisms, because a lot of people put money into DeFi so that they can go trade the market or trade NFTs or trade whatever the new big thing is, right? But when we start to see exits, this typically is an indicator of end of cycle. Now, what we can see here is that in April, what happened in April? Well, April, we had a macro bottom in most stocks and a lot of cryptos, because this is when tariffs were kind of put into play. This is when DeFi, in terms of Ethereum DeFi, was at its peak. And I'm talking in Ethereum currency, not US dollars. But since then, we have been coming straight down. We went from 28 or 29 million Ethereum in DeFi to now 21 million Ethereum in DeFi, which is about a 25% drop all a year. And we're not really seeing a big increase here. Now, you may say, well, that's Ethereum. Let's look at Solana, right? And so if we look at Solana in Solana currency, in DeFi terms, we've seen a huge push up, right? But what happened with Solana, right? We saw a massive drawdown in the price and in the usage after FTX collapse. We didn't necessarily see this same type of collapse in price, DeFi movement and price movement as we saw with Solana. Solana went down to $8 and then went back up to $250. Ethereum went to about $800 and went up to $4,000. Not really a comparison in terms of the drain in the previous bear market to the pump in this cycle. But we're also seeing a lot of other things occurring across the board, right? If we look at overall DeFi, you can see that there's still large TVLs, right? Total value locked in Ethereum is 85 billion, Solana is 11 billion, Binance 8 billion, Bitcoin 8 billion, Tron 5.5 billion, and we have Base as well, 5.1 billion. But what is driving most of this DeFi in these ecosystems? Well, a lot of it comes down to stable coins. This is the Visa stablecoin dashboard, and you can see over the last 12 months, $50 trillion in transaction volume. You can see that stat right here. That's a lot, right? That's a lot of money transacting, $50 trillion just in stable coins on public blockchains. And then you can see here, retail size transaction volume in the last 12 months was $62 billion. And so we know that there's a lot of money being moved in stablecoin rails, and some of these stablecoin rails are through DeFi rails, are through Ethereum, Solana, some of the other coins as well. But what else has really been driving DeFi and DeFi trading and a lot of speculation? A lot of this has been the meme coins. And so we really have to understand where we are in the cycle, right? Not just from a Bitcoin halving perspective, but also from what is the big thing this cycle. Now, we do know that Wall Street has gotten involved in the big cryptos like Bitcoin and Ethereum and a few other honorable mentions, but really just Bitcoin and Ethereum. And a lot of that money has been entering since 2024 effectively. And so it's been almost 2 years since we saw the ETF inflows and all of that. But beyond that, Wall Street is not really that involved in anything else. So what is the other big thing? Well, it's meme coins. And meme coins this cycle are the NFTs from last cycle, right? There's no actual value or utility or like specific thing that meme coin, like one meme coin can do that another meme coin can't. I mean, the whole idea of meme coins is it's a meme. It's nonsense, right? And NFTs in the previous cycle, you had people saying, well, Cryptoviser, I own this NFT and it's mine. And I'm like, yeah, but you paid $5,000 or $50,000 or $5 million for that meme coin, and somebody could just go and right click and save it. No, you can't do that. It's like, no, that's what people are doing. So you don't really own it. No, I own it. It's on the chain. It's on chain. It's like, but anybody could just copy it. No, they can't do that. Then they don't own it. And it's like, okay, like there's utility in the fundamental value of having ownership showed and proved on chain. But NFTs was just kind of like, it was like the meme coins of NFTs, right? Real NFT usage is the token, right? If you have a car ownership, you can transfer that ownership on chain using the NFT from one person to another, right? So it's on the public ledger. There's ownership involved. There's an owner behind it. Like that's kind of the idea of the NFT technology. Using the monkey JPEGs or whatever, the CryptoPunk JPEGs, that was just kind of the proof of concept, but people got so caught up in it. And there was a lot of fake trading on it. And that's the same thing that we're seeing with meme coins this cycle. And so NFTs were hot as the revenue was hot, as the trading was hot. Same thing with meme coins. And so once we start to see a decline in meme coin usage or market cap or revenue, well, everything else under it collapses. And that's literally what we saw at the end of 2024 into 2025. We saw meme coin revenues on Pump Fund go higher. Same thing with, well, Hyperliquid is a little bit newer than that, but you guys can see a lot of usage, Hyperliquid, a lot of usage at the end of 2025. This is when Aster started, popped up and became competition to Hyperliquid. And a lot of this is just the same thing, right? It's just trading nothing. And this is why a lot of these platforms, they started incentivizing the celebrities, create a meme coin. Argentina, create a meme coin. Hawktua, create a meme coin, right? And what did Hyperliquid and Aster start doing at the end of 2025? They started incentivizing like influencers to drive their audience to go trade on these platforms, and they would get a cut of the revenue. So it became a revenue share, right? But again, that's not changing that the underlying coins that you're trading on Hyperliquid are either shit coins or you're just trading on leverage. And again, it's in the name, hyper liquidation, right? Hyperliquidation. Liquidation is what happens and is what is going to happen when the market starts dropping, right? And so what have we seen here? Well, a lot of movement into 2024 and then basically nothing into 2025 and then a little bit of a spike at the end of 2025 on Hyperliquid, right? And this is in terms of total revenue. Now it's still a lot of revenue, but same thing with Pump.Fund. Big spike in the end of 2024 into 2025, downward trending, and then a little bit of a pump towards the middle to end of the year. But as you guys can see, it's trending down. And so that in itself is very bearish. Now, again, if we look at Solana, in terms of Solana in DeFi, it has started to stabilize out. And if you guys know anything about how cycles work and how charting of cycles look, this is, we had a massive run up and now it's been sideways trading, but you can see these major spikes to the downside. This is typically indicators or warnings that the market is not going to hold up that much longer. I mean, you can clearly see that here at the in the middle of 2025 in July, when we called the top of the overall crypto market, we saw the first big major like drawdown or gap down. We saw it again in September. And then in the beginning of October, we saw another gap down in a lot of different cryptos as well. These were warnings. You can see here, Solana revenue significantly down. And again, significantly down after the meme coin fiasco in 2024. After that, revenue came down 92%, and it has never recovered since. Now, that doesn't mean it's not going to, but this gives you insight into where we are. Now, the price of the coin may not be in this bear territory yet, but you can also say, technically, the price of Solana is not above all-time record highs and not really above previous cycle all-time record highs. Previous cycle all-time record high was about $250. And this cycle, it went up to about $260, $280, something like that. But that's not really that much more. And this is what we've seen in previous cycles as well. In the previous cycle in 2021, Litecoin hit its all-time record high, went a little bit above it, and then came straight back down. So it didn't really make a massive move above its previous all-time record high, as Solana hasn't either. But people are the most bullish they've ever been as we're starting to downtrend again, as we see Solana's DeFi usage kind of stabilizing out. And again, at the end of cycles, once you start to stabilize at the top of the hill, what happens on the other side of the hill? Well, you start to go down. And in fact, you go straight down. And that's what we're seeing with Ethereum as well. Ethereum revenues significantly down since 2024. You can see beginning of 2024, massive drop in revenue. I think a lot of this had to do with ETF excitement. I don't remember fully. But then you can see we're down substantially since then. And so from a metrics perspective, Ethereum is already in a bear market, right? DEX volume significantly down. Transaction activity trending down for sure. Let's put this on the monthly. It's still higher, but not by much, really not by much. And the Ethereum staked is also coming down substantially. We've talked about this. And I do think that you can see on the Ethereum validator exit queue, the end of October, early November was when most of the coins that were unlocked in September were beginning to get unlocked in November. And the queue to exit Ethereum staking has not decreased, meaning there's a steady flow of people pulling their coins out of Ethereum staking. There's really only one reason you would pull your money out of Ethereum staking: to sell, because there's other mechanisms that you can use it for DeFi and all this other stuff. But we're seeing Ethereum DeFi dropping. We're seeing Ethereum staking dropping. What does that mean? Well, in my view, when you combine it with the fact that Ethereum has barely hit all-time record highs, right about $5,000, which is few percentage points higher than its previous all-time record high, when people were calling for $10,000, $20,000, $50,000 prices this cycle, it kind of lets you know that, well, people are exiting Ethereum. They're not just exiting the Ethereum validator or staking queue. And by the way, there is some Ethereum going back into staking, and some of this could be the Ethereum treasury companies. But you can see that the entry is about half of what the exit is. So that's still a large portion of coins that are unaccounted for and potentially being sold. And meanwhile, the Ethereum treasury companies that popped off in the middle of 2025, essentially when I called the top of the market, that was peak euphoria. And most of them are, basically trending down from a price perspective. They're not raising as much money as many people thought that they would, at least at this point in the cycle. And some, like ETHZilla, are actually selling their coins to then go and do stock buybacks to bring their NAV back up and also bring back to their shareholders. Because at the end of the day, if you're just buying and buying and buying Ethereum and the stock price is going down, 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 why is anybody going to invest in that? This is why we've seen major collapses in the price perspective from some of these Bitcoin treasury companies and Ethereum treasury companies. I mean, there's multiple Bitcoin treasury companies that are down 97% just since the middle of 2025. And I'm recording this not even at the end of 2025, near the end of 2025, right? So in the last 4 months, they're down 97%. And the Bitcoin price is at all-time record highs still, effectively, or at least above $100,000. And so this is a huge red flag, in my view, for the market. And then that brings us to Base, which is Coinbase's DeFi network. Now, we've been covering Base, and one of the interesting things about Base is that Coinbase and the Base engineers have stated repeatedly when they first launched Base that they were not looking, and they wouldn't be looking to launch their own coin. And then at the end of cycle, liquidity drain of the market, what do? They say, oh, we're going to be launching our own coin. That, to me, was a huge red flag in the markets, telling us where we are in the cycle, because they didn't do this when they first started the project. They should have, but they didn't. They're doing it after the project's already been up and running, after we've seen a massive decline in the Ethereum that's locked in on the Base network. They've done this basically at the end stages, at the 18 months after the Bitcoin halving cycle, and they still haven't even launched the coin just yet, at least when I'm recording this video. And so these are all kind of liquidity sucks of the market, right? The meme coin situation, liquidity suck. Hyper liquid and incentivizing influencers to get their audience, their followers to go and trade so that they can get a revenue cut, that's a liquidity suck. We heard the Argentina coin engineers said that they extracted $100 million in just the first day from that coin. And that's money that exited the markets and never re-returned. Hence the massive decline in Solana revenues at the beginning of 2025. And so that's where we are in the cycle, right? A lot of people are calling extended cycles, saying that the cycle is going to go longer, but I don't think it is, right? We're in a 4-year cycle for the Bitcoin halving, at least. And I look at this very closely, this halving tracker, because it's been very accurate in the previous three halvings. It's not saying it's going to be 100% accurate, but it could give you a little bit of a guide. And again, the further we go, the closer we are to trending down. But if we look at all the data that we just presented in front of this channel, most of these coins, most of these major blockchains peaked in 2024, either at the beginning of the year like Ethereum, or at the end of the year like Solana and Pump Fun and all of these. Everything that we're seeing now has, I mean, these, look at Hyperliquid, right? Even with Aster popping up in September, October to counter Hyperliquid and compete with Hyperliquid, it hasn't even gotten close to where it was in 2024. So everybody is still hoping and praying, and that is not an investment strategy nor an investment thesis. And so where are we in the cycle? Well, if we're at the end stages of the cycle, like I've said, and we've already topped out, like I predicted, well, we have some downtrending to go. And what we've already seen is that a lot of influencers and a lot of people in the markets have already called the bottom. I mean, people are telling me on my channel, oh, Cryptoviser, you sold the bottom of the market. I'm like, what makes you think that's the bottom of the market? Even though some coins are down, right? Even though Nakamoto is a Bitcoin treasury company, is down 97%. It could still go down another 97%. That is the key here. And so when we're at the top, okay, and we have a little bit of a dip, which we had in the beginning of October, some people remember it, some people don't, but a lot of these coins outside of Bitcoin, I think it was mostly the other coins, but at the beginning of October, we had what people call a flash crash, right? Right here, even Bitcoin went from 120,000 down to 110,000 in one day, right? And many other coins dropped even more precipitously. As soon as we hit that one day drop, people were already calling the bottom. And I was like, no. That was just the beginning. Like, you don't formulate bottoms in the market after one day. That's a lesson that I've learned in these markets before, because I've bought dips like that. And then I've gotten crushed because the dip didn't stop dipping. Go look at the psychological market cycle chart, psychology of markets charts. Once you exit the complacency phase, which is after the top of the market, effectively you go straight down. Now with Bitcoin specifically, you can see in the previous cycle, we had a full 1 year downtrend, a full 1 year downtrend. And along that downtrend, people were calling the bottom continually. Oh, that's the bottom, that's the bottom, that's the bottom, that's the bottom. I don't think I was calling the bottom at that point, but when I sold some of my altcoins in the previous cycle, people were like, no, Cryptoviser, we're going to have an extended cycle. June is going to be the bottom. Well, June is going to be the top. Well, June ended up being the bottom of the cycle for most altcoins. And then Bitcoin bottomed out at the end of the year. And 3 weeks before the FTX collapse, I told my viewers, you may want to reposition your portfolio, get out of positions that are already in loss, shore up liquidity, shore up dollars. That way, if we do have a major correction, you can buy that bottom of the market. And people were like, Cryptoviser, why would I sell for a loss? I'm just going to hold on to it forever. 3 weeks later, the whole market collapsed. And we were buying that bottom. While the rest of the market was freaking out, we were buying it. And so when I look at all this data, right, nothing in this year, nothing in 2025 shows that we have better metrics than 2024. And so people will say, but Cryptoviser, we're at the bottom. And I'm like, no. We're definitely not at the bottom of the market. We haven't even rotated fully yet. And the rotation takes time. But you can see Solana, Hyperliquid, Pump Fun, even somewhat with Ethereum, although Ethereum has been more steady. And I think a lot of that has to do with stablecoin usage and the banks getting involved. But look at XRP. For years and years, we were promised that banks are going to use XRP, Swift is going to use XRP, stable coins are going to be put on XRP, and none of that is true. Ripple doesn't even want XRP. Ripple is selling it. And so when I look at these top cryptos here, and I understand all the metrics in DeFi, in the revenue for these ecosystems, and everything is trending down, the prices haven't even corrected yet. And why is that? Well, most of the market is still bullish. But when they're greedy, we get fearful. And that's where I think that we're at. I think we're at the fearful stage. People are going to bring up every metric. Well, Raoul Pal showed us this chart. And well, Cryptoviser, the fear and greed index isn't even on extreme fear. Well, Cryptoviser, the M2 money supply is expanding. You can pull up any chart to confirm your thesis because there's hundreds of thousands of charts that you could pull up to confirm your thesis. But at the end of the day, there's one chart that I look at that tells me what is going to happen in the market. And it's the Bitcoin halving chart. And this is, I think, the most accurate chart this entire cycle. And really the history of Bitcoin. And I don't use it as the only chart, but this chart is the guide. And we are now past the 18 months after the Bitcoin halving. We are now past the 550 days after the Bitcoin halving. And could we hit new all-time highs after this? Of course. But here's the deal. The further we go, the closer we are to downtrend. And every cycle previous, we've downtrended. Every metric that we're seeing is downtrending in 2025, but prices have not corrected appropriately, in my view. And so when you see those flash crashes like at the beginning of October, that is the warning. The market is going to correct to fair value, and it's going to be much lower than where we're at today. But then it's going to overcorrect to the downside, and that's when we buy. It's not going to happen over the course of a day, probably not even going to happen over the course of a week. It's going to take months. Once we see a bottom forming, once we see panic in the market and capitulation, then we know, buy the market. Anyway, let me know what you guys think about everything we discussed in today's video. Let me know what you guys think about the Bitcoin halving chart and all the metrics that we covered and where we are in the cycle. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video we upload every single day on this channel. Invest responsibly, and I'll see you guys on the next video.